Some people wait until they're rich to start investing. That's like waiting until you're in shape to go to the gym. It's backward. The truth, you can start building wealth with less than the price of a nice dinner. All it takes is $100 and the courage to take the first step. Most people underestimate how powerful a single shift in mindset can be. When it comes to money, the majority are stuck in the role of consumer. They earn, they spend, they repeat. $100 comes in, and without a second thought, it flows out on things that bring short-term pleasure but no long-term value, a meal at a restaurant, a pair of shoes, the latest gadget. And while there's nothing wrong with enjoying life, there's a huge opportunity cost hiding in plain sight. That $100 could be the first brick in building a financial foundation. But to see that, you have to change the way you view money. You have to move from seeing it as fuel for spending to seeing it as capital. A resource that, when placed in the right environment, grows on its own. Think of it like planting a tree. If you eat the fruit the moment you get it, you'll have a moment of satisfaction, but that's it. The fruit is gone, and so is the chance for more. But if you plant that seed instead, you're making a decision that pays off for years. It's not glamorous at first. The tree is small, maybe even fragile, but as time passes, it grows stronger, produces more fruit, and eventually feeds you endlessly. That's what happens when you start treating even small amounts of money as investments instead of expenses. The $100 in your pocket today might not seem like much, but in the right asset, it can generate returns, and those returns can generate more returns. This is the mental leap that separates spenders from owners, the understanding that your money is not just a tool for buying things, it's a tool for buying freedom. The transition from spender to owner doesn't happen overnight. It's a conscious decision you make every single time money enters your hands. Owners ask, how can this dollar work for me? Spenders ask, what can I get for this dollar? It's the difference between instant gratification and delayed gratification, between buying liabilities that fade away and buying assets that build you up. And here's the reality. You don't need thousands to become an owner. Ownership is a mindset before it's a bank balance. The moment you decide to put that $100 into something that has the potential to grow, you've crossed the line. You've stopped trading your hours for money without purpose, and you've started building a system where your money starts working harder than you do. That shift, right there, is the first and most important step to building wealth from any amount, even one as small as $100. There was a time when investing in world-changing companies was a luxury reserved for the wealthy. If you wanted to buy a single share of a major corporation, you might need hundreds, or even thousands, of dollars just to get in the game. That barrier kept everyday people out of ownership and trapped them in the role of spectators, watching from the sidelines as the wealthy grew wealthier. But that era is gone. Today, technology has dismantled those walls. With fractional investing, you can buy a piece of a share for just a few dollars. You no longer need $300 to invest in a tech giant. You can own part of it for the cost of a coffee. This change isn't just a convenience, it's a revolution. It means that for the first time in history, the playing field is closer to level. Fractional investing allows your $100 to go further than you ever thought possible. Instead of putting all your money into one company and hoping it performs well, you can spread that investment across multiple businesses, industries, or even countries. Think of it like a basket of seeds. You don't plant all of them in the same spot and hope they grow. You scatter them across fertile ground, increasing the odds that at least some will thrive. For example, you could put $20 into a tech company, $20 into a clean energy stock, $20 into a healthcare ETF, $20 into a blue chip dividend payer, and still have $20 left for a high growth startup. That kind of diversification used to require thousands of dollars and a broker. Now, it's available in your pocket on a smartphone app. And here's the deeper advantage. Fractional investing makes it possible to invest without waiting for the right time. Too many people get stuck in the trap of analysis paralysis. They keep saving, keep waiting, keep watching the market, but never actually start. The beauty of fractional investing is that you don't need to time the market perfectly. You just need to get in. If you start with $100 today and keep adding small amounts over time, you'll build ownership in assets that can grow with you. The key is momentum. Fractional investing removes the excuse of "I can't afford it" and replaces it with "I can start right now." In the world of building wealth, now is always better than someday. If there's one force in finance that feels almost magical, it's compounding. On the surface, it looks simple: earn a return, reinvest it, earn a return on the new total, and repeat. But over time, this process transforms small beginnings into massive outcomes. It's like rolling a snowball down a hill. At first, it's tiny and unimpressive, but as it keeps rolling, it picks up more snow, gets heavier, and grows faster. What starts as $100 can become thousands, then tens of thousands, not because you worked harder, but because your money started working for you. And here's the most exciting part. The earlier you start, the more time compounding has to work its quiet magic. Waiting even a few years can make the difference between a modest sum and a life-changing one. Most people underestimate compounding because in the early years, the growth feels painfully slow. That's why so many quit too soon. They plant a seed, and after a few months, they're disappointed it hasn't become a tree. But compounding doesn't work in sudden leaps. It works in steady, relentless steps. The first gains are small, almost invisible. But as they stack on top of each other, something incredible happens. Growth accelerates. 10 years from now, you might look at your portfolio and realize that the returns you earned in just that single year are bigger than your entire starting amount. That's the tipping point, the moment when compounding shifts from slow crawl to runaway train. The key to unlocking compounding is consistency. $100 alone won't make you rich, but $100 invested today, followed by another $100 next month, and the month after that, builds unstoppable momentum. Each deposit increases the base that earns returns, and each return you reinvest increases the base even more. It becomes a cycle: earn, reinvest, grow, repeated over and over until your money is doing more work than you are. And remember, time is the most powerful multiplier in compounding. You can't go back and start earlier, but you can start today. Every day you delay is a day you lose forever in the compounding race. Those who understand this don't wait. They take that first step, however small, and let time and discipline turn it into something extraordinary. You don't need to be wealthy to start investing. You need to start investing to become wealthy. Whether it's shifting your mindset from spender to owner, taking advantage of fractional investing, or letting compounding work its quiet magic, the formula is simple. Start small, start now, and stay consistent. That $100 in your hand today can either disappear in a moment or it can become the seed of your financial freedom. The choice isn't about the money, it's about the decision, and the best time to make that decision is not next week, not next month, but today. If you found this video helpful, hit the like button, subscribe, and turn on the bell icon so you never miss an update.